With inflation being the talk of the town, what seems to be from the Federal Reserve, Jerome Powell, saying that it's transitory, to Warren Buffett last week in the shareholder meeting saying that inflation is real, I thought I'd put together some names, some different sectors of the market that benefit in times of inflation. But if this is your first time here, my name's Nick. Welcome to Ways of Wealth. Before we get into the video, I'd like to ask you a huge favor. If you learn something new or you get some value, hit that like button for me. I definitely appreciate that. And please consider hitting that subscribe button, turning that notification bell on. Let's hop into the computer to discuss a little bit about what's going on in the market. First and foremost, how to profit from inflation. We see here in previous videos, just to touch on quickly, we've talked about how inflation is coming. Inflation is good for the economy. It seems like things are progressing in the right direction. With that being said, if you want to check out my previous videos, we'll link them above. You can definitely check that out. But the premise, the focus of this video is going to be how to profit, what sectors look good. So many different factors contribute to rising prices. When the overall demand for goods build, supply prices will rise. Increases in the cost of production due to everything from growth in the cost of labor to rises in the cost of raw commodities. Most consumers view inflation as an adverse situation. However, inflation does have a positive side when looked at from an investment standpoint. The first sector to take a look at is real estate. Real estate is a popular choice, not only because of the rising prices increase the resale value of the property over time, but because the real estate can also be used to generate rental income. Just as value of the property rises with inflation, the rent can also increase over time. So what can we play on the Canadian side or even on the American side overall? REITs. Real estate investment trusts are the way to play this sector. We'll take a look. XRE is one that's provided by iShares, xre.to, for $18.63 as of close on May the 7th. We can see the performance over the past year has been on the uptrend. Obviously, a lot of concern with the commercial side of things with the way the market's going right now. But over the past year, we can see that it is up almost 27%. Another product there, my apologies, 26%. Another product is the BMO one. The BMO one is zre.to. We'll take a look at that. It's closed at $24.78 on Friday. Just going back to both of them compared, the yellow line is the BMO product, the ZRE. The blue line is the iShares product. It looks like the BMO product is the better performing one as of November of last year. And both of these are up 27 and 30% respectively. So it seems like the money has started to move into that side of the trade. Where is another sector that we can take a look at? We can see here that the next one is commodities, going back to the original part of the raw commodity side of things, and in terms of the economy coming back online, and with lumber prices and copper shooting as of last week, lithium, we've seen many different commodities that have shot up over the past year. And let's just take a look. When a currency is having problems, as it does when inflation climbs and decreases its buying power, investors might also turn to tangible assets. For centuries, the leading haven has been gold. To a lesser extent, other precious metals. Investors tend to go for gold during inflationary times. As of this past week, gold has definitely been on the uptrend, but it's kind of been lacking over the past year in terms of what we thought it could be. It hit as high as $2,000 per ounce. I think it closed on Friday at the 18 to mid 1800 level. So it's definitely something to watch out for. I know a lot of gold bugs are saying that there's a lot of money that might come back there. For me, where I'm looking at and where I'm in personally is what we'll talk about next. So looking at the chart here, we have two different products. Again, a BMO product, an ETF, and an iShares product. Personally, I'm in the ZMT one, which is the BMO. It closed on Friday at 64.61. Over the past year, it's done over 122% growth. So this one, am I saying to jump into it tomorrow? I'm not entirely sure, just trying to provide you different ideas if you think that inflation is going to persist. The other one is the iShares product, and we can see here it trades XBM.TO on the Toronto Stock Exchange. Closed on Friday at $20.18. Again, comparison of the quotes. The blue line is the BMO product. The yellow line is the iShares. And the iShares seems to outperform, especially over the last couple months. So something to take into consideration there. Is the trade done? I'm not entirely sure. Let's take a look at the max chart. It looks like it's just coming up to breaking even. So it looks like there could be a little bit more room to run, but I'll definitely leave that up to you. Another area in which this article doesn't really touch on, they do touch on bonds as a potential, but it also touches on stocks. Another area that I would like to touch on, and another area that I think could be an opportunity, is consumer staples. We're talking about companies that can increase their prices to the end consumer to keep up with this inflation. And then there's a little bit of downside protection because normally consumer staples aren't really cyclical. There's stuff that we use and buy on a daily basis, whether that's food or, deodorant, shampoos, that kind of stuff falls into consumer staples. And the way that we can play this is XST. It's an iShares product. And what I want to do is just show you, first and foremost, the companies that are in this ETF. Closed at $67 on Friday. But we look at the top 10 holdings. You have Alimentation Couche-Tard, which is Circle K's, gas stations. As we reopen, people will start, having the need to fill up gas a little bit more. So that'll be interesting to see. Metro, Loblaw, I'm particularly focused on because of the Shoppers Drug Mart addition a couple years back. But what makes this important is people are going to start going to Shoppers Drug Mart for vaccines, so they might pick up other things along the way. You have Saputo, cheese, and other food products, George Weston, Empire, Maple Leaf Foods. So as you can see here, a lot of food. And again, going back to the sentiment that if we do see weakness in the market, which a lot of people are predicting, but I mean on an all-in-all basis, these are companies that are going to continue to bring in revenue regardless what the situation is. We'll also take a look and see how it has performed over the past year, just to give you an indication. And it looks like it's relatively not up that much. It started off the year at 61, so this could potentially be one to definitely focus on in the next couple months. Maybe buy on a pullback. Obviously, make sure you do your own research and see how you feel about it. But we can see ever since February and kind of this inflationary trade, we're seeing big tech sell off. Money is going into these inflationary names. We can see that here in the chart where it's kind of picked up from that February low all the way up to 67. So I know right now this might be a good time to be transitioning into tech, but if you think inflation is here and the Fed or the Bank of Canada won't be able to control it, these are some names that you can definitely play. Yes, they have started the run, but it could continue more. I hope you enjoyed the video. I hope you got some value out of it. If you're still here, click that like button for me. And if you haven't already, please subscribe. Have a great week on the markets. Happy trading.